The stock market is a great source of income for those who understand its nuances and know when to make the right trades. Investing in stocks requires careful financial planning and the ability to recognize the best time to enter or exit a trade. Timing is key when trading in the stock market, and it can be difficult to determine when is the best time to buy or sell stocks. In this video, we will discuss some tips for determining the optimal times for trading in the stock market. Best time of the day to trade stocks. To maximize profits, it's important to understand the best times of day for trading. By understanding the hours in which markets are most active, traders can focus their strategies on times of peak liquidity and reduced spreads. Trading hours can vary depending on the stock exchange, market, and country. Ideally, traders should begin investing in stocks as trading begins and as markets open in the morning and close near market close. The key is to invest early in order to take advantage of periods of lower volumes that spread out over time. This can help minimize slippage because there will be a smaller pool of shares traders have to choose from when purchasing or selling. Each day has a trading session, which can be morning, afternoon, evening, or night. There are differences in trading hours depending on the market. Some markets are open 24 hours a day while others close in the evening and reopen in the morning. Even though U.S. markets close at lunchtime and reopen around 9 a.m. the next day, U.S. traders can have some of their positions liquidated without losing time by marking down positions early or even better doing logbook trades to avoid unnecessary movement of shares that may result from early liquidation. A useful hour for investing is between 4 p.m. and 5:30 p.m. when the market is digesting the day's price movement. All markets follow a similar pattern. They open and close at regular periods of time, but there can be variations in when they open and close. The last week of each month is usually a quiet period for the market, while Fridays are always the busiest days. It is not possible to trade on Saturdays because of this. It is always a trading day even though Saturday has no trading hours listed on exchanges around the world. The opening and closing times for U.S. markets are approximately 10:00 MEST. New York, 12 p.m. Eastern Standard Time. Chicago, Monday, 3:00 p.m. EST. London, Hong Kong, 5:00 p.m. EDT. Tokyo, 8:30 m. EST. Sydney, closing times of U.S. markets vary by a half hour on Sundays. The best time of the week to buy stocks. When it comes to trading the stock market, timing is essential. Understanding when the best time of the week to trade can help you optimize your profits and minimize your losses. Knowing which days of the week offer the most potential reward and least risk can help you determine when to enter into trades and when to exit. Trading on Mondays offers the most potential reward and least risk. With a 7% average return, Mondays offer the best opportunity to increase your profit and minimize your losses. Trading on Tuesdays offers an average of 5% profit with a 1% loss. Tuesdays have a slightly higher risk than the other days of the week for traders, with an 18% chance of experiencing a loss during trading on that day. Wednesday offers an average return of 7%, but with a higher risk than the other days of the week. There is an average 16% chance that anyone trading on Wednesday will experience a loss during their trading day. Thursday offers an average return of 8% and guarantees traders no losses, but there is also a lower level of profit with this opportunity as well. Thursday has an average of 9% profit with traders experiencing just over 4% in losses on that day. Friday is the riskiest day of the week for traders. There is an average 15% chance that anyone trading on Friday will experience a loss, and the average return for this day is just 3%, compared to 7% on Tuesdays. Trading on Fridays offers the most potential reward but also has a higher likelihood of experiencing losses as well. With an average of 9% profit and 4% loss, Fridays offer you greater rewards with a higher level of risk as well. Trades on Saturdays have an 8% return with no losses, but also offer less opportunity to increase your profit than trading any other day of the week. Trades on Sundays have a 25% return with no losses, but also offer the highest opportunity to increase your profit. What does buying the dip mean? Investing in the stock market can be a daunting task for anyone who is new to it. One of the most popular and important investment strategies used by experienced investors is buying the dip. Buying the dip is an investment strategy where investors buy shares of a company when its stock price has declined. The investors feel that the company's problems are temporary, and the dip will be followed by an upward trend in share price. What is buying stock when it drops? Buying a stock when it drops is one of the simplest forms of investing. If you believe that a stock's value will increase over time, you can buy shares of this company at a lower cost than what you would have to pay if you waited for its value to go back up again before buying them. Buying a stock when it drops is one of the simplest forms of investing. If you believe that a stock's value will increase over time, you can buy shares of this company at a lower cost than what you would have to pay if you waited for its value to go back up again before buying them. Buying during a dip in the share price is an investment strategy that allows investors to invest in companies without having to wait for them to come back up on their own. It allows an investor who wants exposure to certain stocks but doesn't want the risk or hassle of researching every company's individual share price to make a purchase. However, buying when the share price is low will not always mean that the investment will be profitable. If the company's business plan is sound, but its share price falls because of macroeconomic factors or other externalities, then purchasing shares at that time may be a wise decision for an investor. An investor may purchase shares at a low price if they believe the share price will rise over time to make up for that low purchase price. The key to making a successful investment is to buy low and sell high. Investment can also be determined by an investor's desire for the tax benefits of investing. In Canada, these tax deductions are available to individuals with a net worth of $1.6 million and higher, or who earn at least $200,000 per year. The government has encouraged investors to invest in an RRSP since 1996 due to its tax advantages and inflation protection capabilities. What is the best month to buy stocks? Understanding which month is the best to buy stocks can help you make smarter investment decisions. We'll look at historical data, use cases of AI writing tools, and other factors to determine which month is the best to buy stocks. What is the best month to buy stocks? The graph that we found plots the monthly performance of the S&P Wink with tongue sticking out 500 index from 1989 to 2019. The value on the vertical axis is a percentage change from one month to the next, and the horizontal axis is time in months. At first glance, it looks like October has proven to be one of those months that has been consistently good for stocks. So we came to the conclusion that October is the best month to buy stocks. Thank you for watching.